What's going on, guys? So once again, Tesla and NIO keep getting attacked. We have headlines like Tesla heading to $35. We have a new price target for Tesla at $150. We're going to take a look at Tesla charts, and I'm going to give you my opinion as to how low I think Tesla and NIO will go. Before we get this video started, let me know, are you guys a Tesla bull or a Tesla bear? Let me know your opinions on Tesla and NIO and what you think about both these companies, where they're heading, because as of now, it looks very bad for both these companies. These companies have been on a serious downfall. And also, don't forget to like this video, hit that notification bell, and smash that subscribe button. Right now we have Tesla only down 0.75%, but we're sitting at $188.44, and we have not seen these prices since December 2016. So how low is Tesla gonna go? I've already previously drawn this support line here at about $180. We don't see any indications of Tesla recovering. We have the 50-day moving average right here and the Bollinger Bands, and they don't seem to want to cross one another. We're also looking at the MACD lines, and there doesn't seem to be any buy signal right now. These lines have not crossed, and I'm going to give you guys a couple examples of what I'm talking about. So right here we have a 1-year chart for Tesla. Here the Bollinger Bands and the 50-day moving average have crossed, and we've seen a decline ever since. And also here, if we look below, we see the MACD lines. We had a sell signal right here, and as you can see, ever since, Tesla has declined. Right here, the MACD lines, we had a buy signal, which was around the same time as here, and Tesla had a nice run. Right here, the Bollinger Bands and the 50-day moving average crossed, and of course we had a nice run as well. So if we go to the present, which is in the past month, we don't see the Bollinger Bands or the 50-day moving average crossing, and we're not getting a buy signal from the MACD lines. So it's looking not so good for Tesla right now, and it does look like we're going to continue to decline and most likely be hitting this $180 support. And I did say if it breaks below that support, we could possibly be going as low as 140, but for now we're going to be keeping an eye out on that 180 support. Also, Tesla is definitely right at the bottom of their 52-week range. Now we're going to do the same thing for NIO and take a look at them. So unfortunately for NIO, we don't really have a possible support we can go off of, because this is a company that IPO'd just less than a year ago, and we are literally at all-time lows right now, $3.16, and NIO, my guess, is going to go to $3, and if it breaks below $3 at that point, it can continue to decline. As you can see right here, I had a downtrending line and it literally broke it today. NIO is down 12.6% in one day. So we're going to look at these charts for NIO, and we're not getting any buy signals for NIO. Right here, we're going to zoom into the past 1 month. We're not really getting a buy signal. We kind of got a buy signal here, which was a false alarm. As you can see, NIO has just been dropping, and the Bollinger Bands and the 50-day moving average have also not crossed. I'm going to give you the same example with NIO. Right here, before the sell-off, we had a sell signal right here. The MACD line showed a sell signal, and the Bollinger Bands and the 50-day moving crossed, and of course we've seen a nice sell-off ever since. So we're definitely going to be keeping an eye out on these charts, and as soon as I see a buy signal, I'll try to keep you guys updated as fast as possible. So now I want to move on to this article, which I did talk a little bit about in my morning live stream today, which is Barclays cuts Tesla price target to $150. So Barclay analyst Brian Johnson's reiterated his underweight rating and lowered his price target from $192 to $150. The thesis is Tesla remains the most hotly contested battleground stock on Wall Street, but Johnson said the market seems to be acknowledging the bear case is a realistic one, and it's becoming increasingly likely Tesla will stall as a niche luxury electric vehicle maker. And it's funny how he says that, because today we had an article released also saying that Tesla is a niche company. So Tesla is just getting attacked left, right, and center. And we're gonna go look at the bear case real quick. And in this article, it talks about how Tesla could fall to $35 a share, which I do think is ridiculously low. Vehicle productions and deliveries are on the decline in 2019. The company burned almost $1 billion during the first quarter of 2019. The recent capital raise will buy some time, but only for about 10 months. So right here we have the production and deliveries for these vehicles in 2018 from Q1 to Q4 and 2019. So in Q1 we had 34,494 vehicles produced. In Q2 we had a 55% increase to 53,339 vehicles produced. For the vehicles delivered, we had 29,980 vehicles delivered, and in Q2 we had a 36% increase to 40,740. So then Q3 is where we've seen a drastic increase of vehicles delivered, which went up 105% to 83,500 vehicles, which is a huge increase. It honestly didn't surprise me to see a slight decline from Q4 to Q1. So in the next following month, Q4, we had a 9% increase, 90,700 vehicles delivered, and also we had a vehicles produced 8% increase. So from Q2 to Q3 we had a 50% increase, and then from Q3 to Q4 we had an 8% increase. Realistically, I think Tesla outperformed themselves. They delivered a lot more than anyone expected. The pullback in 2019 Q1, I'm not surprised to see that, because we can't expect Tesla to increase vehicles produced by 50% and for vehicles delivered to increase by 100% quarter over quarter. I think that was a very good quarter and they outperformed themselves. So of course, seeing a pullback is not surprising to me. I would have to disregard this argument, the fact that the vehicles produced and the vehicles delivered has declined in Q1 2019. I think that was expected, especially after the huge increase in Q3. So now we're going to move on to the next thesis, which is Model 3 had a very good year in 2018. From 9.7K produced Model 3s in Q1 to 61.4K in Q4, a 530% increase. Model 3 deliveries went up by 670% from 8,200 in Q1 to 63.1 thousand in Q4. This is exactly what we've seen right here. And of course, once again, from Q1 to Q2, we had a huge increase, 193%. And then even Q3, we had another huge increase, 86%. So once again, I'm seeing the same thing. Tesla's outperforming themselves. And then we kind of slowed down from Q4 2018 and then a 3% increase from Q1 in 2019. We can't expect to see Tesla producing vehicles 193% more than previous quarter after quarter. I think that would be extremely unrealistic. But the fact that we've seen a 125% increase in vehicles delivered, and then we've seen a 203% increase the next quarter in vehicles delivered, I think analysts and investors expected Tesla to keep increasing that number, which I think is impossible. So then Q1 2019, we had a 19% decrease from 63,000 vehicles to 50,000 vehicles, which is a 19% decrease in vehicles delivered. But when you realistically look at that, from Q1 2018 to Q1 2019, in Q1 2018 we had 8,108 vehicles delivered, and in Q1 2019 we have 50,900 vehicles delivered. So from year over year, that was still a nice increase. Same with vehicles produced. Year over year, we increased from 9,766 vehicles produced to 62,950 vehicles produced. And then we're going to look at the Model S and Model X, which doesn't surprise me that we've seen deliveries of Model S and Model X decline. From Q2 to Q3, we only had a 9% increase. From Q3 to Q4, we had a 6% decrease. From Q4 to Q1, we had a 44% decrease. And this doesn't surprise me at all. Of course, the Model 3 is the more cheaper model, the more popular model. Obviously, it's not the best looking one, but it's the most affordable one. So who's going to buy the Model S and the Model X, which are vehicles that are almost over $100,000, when you can buy an affordable one for $40K? I'm not surprised to see a decrease in sales and a decrease in vehicles produced. So we're going to move on. Q3 and Q4, we've seen operating cash flow was positive. And then Q1 2019, we're back to the negative. Elon Musk is back to burning more cash. So there's not much I could really say about this, except for maybe all this money is being spent in their Shanghai location, because in Q1 2019, Tesla is building a gigafactory in Shanghai, China, which could be very costly. So I'm not exactly sure as to where all this money is coming from and what they're spending all this money on, but I could imagine that one of the reasons is their location in China. We're going to look at valuations now, and unfortunately I'm not going to be able to defend Tesla on this one. So we're going to look at Tesla's price to sale, which is a 1.5. And when we compare that to a company like GM, it's at a 0.34. We compare that to a company like Ford, it's at a 0.25. BMW, it's at a 0.43. So the average of these companies, which is excluding Tesla, is a 0.33 price to sales compared to Tesla's 1.5. And let's keep in mind, Tesla's not even a profitable company. So we have the price to earnings ratio, which Tesla doesn't have a price to earnings ratio because they're not profitable. We have GM at a 5.5. We have Ford at a 12.6. We have BMW at a 5.87. The average of that is a 7.81 price to earnings ratio. And once again, Tesla has no PE ratio because they're not profitable. So we have the price to book, which is a 7.19 for Tesla. We compare that to GM 1.2, Ford 1.08. You guys get the point. So the average of that is 0.94, which you compare that to Tesla, which is a 7.19. You have Tesla right here, even at $190 per share, which is half of its $390 all-time high. Tesla looks way overvalued compared to their competitors like GM, Ford, BMW. Honestly, I can't really defend Tesla on this one because the numbers don't really look good for Tesla. So Tesla has always traded at a much higher multiples than other car manufacturers due to the company's superior growth numbers and innovation. Now, with growth slowing and competitors releasing their own electric vehicles, there is the possibility that investors start pricing Tesla like every other car company. So if Tesla keeps missing targets, doesn't deliver on promises, and can't keep on the growth pace on top of still struggling to achieve profitability, there's little reason to pay such a high premium for the stock. So the table below shows the market cap as well as the share prices of Tesla if it was valued at the average multiples of competitors. The PS ratio, price to sales, which is at 7.45, would make it at 42.05 per share. The PE ratio, which would be at 7.05, would make it at 39.76. The price to book, which is at 4.34, would make it at 24.48 per share. So we have the average price of $35.43 per share, which I would believe would be the most bearish scenario for Tesla, to see Tesla drop all the way down to $35.43 a share. We're going to go straight to his conclusion. Approaching the end of the first half of 2019, Tesla looks significantly worse than it did at the end of 2018. The decrease in both production as well as deliveries is disconcerting to say the least. Additionally, the out-of-control cash burn suggests that the company does not have its costs under control at all. Given the global vehicle demand could slow down in the coming months and years, Tesla will have to find a way to become, and more importantly, stay cash flow positive even during demand fluctuations. Even though they were successful in raising new capital up until now, Tesla cannot rely on cash injections forever because one day investors might refuse to supply fresh capital or at least demand a higher return, which will put more pressure on the company. In the event of a decline to $35 per share, investors would lose 80% of their money. Overall, the downside potential just appears to be substantially greater and more likely than any of the upside. So this was a huge short attack, and this is the most bearish scenario for Tesla, which I do think you always do need to consider. I have a video where I talk about all the bullish cases of Tesla and how I believe Tesla and Elon Musk are changing the world, but there's always two sides to a coin, and this is the most bearish case for Tesla. Let me know what you guys think about Tesla. Do you really believe Tesla can fall down to $35 a share? If so, would you consider buying, or at that point would you get rid of your shares? Or are you guys holding onto your Tesla shares? Are you guys selling? Are you guys buying it as it continues to go down? Let me know your thoughts on this company. And while we're at it, if you enjoyed this video, don't forget, give me a thumbs up, hit that notification bell, smash that subscribe button, and I'll see you guys on my next video. Bye bye.